Do you want to make a lot of money on stocks, but you can't? You're just losing money over and over again. You buy stocks that you believe in, and then they just fall off a cliff and you lose all money. And you're sitting there and you're poor and you're confused on why you don't make money. I've been there. I've done that. I bought a lot of stocks before, and they didn't work out, and I lost a lot of money. However, I made some analysis out of my stock buys, and I found out that I was buying garbage, and you're probably too, because garbage stocks, guess what? You don't lose money over the long run on garbage stocks, because stocks is a company. It's just not some numbers on a monitor. It's actually a product that the company is selling. So in this video, we're gonna go through on what kind of companies or stocks you should be buying and what you should avoid. And I know a lot of investors have, for example, bought Neo, and everybody knows what Neo is. So I'm not going to go into some boring details. But for example, this one bursted out on 2020 when Corona broke out. The stock just flew through the roof, and a lot of people made a lot of money because they knew when to get out. They found the bubble, they got in the bubble, but they went out the bubble. However, a lot of people have lost tons of money on this stock because they held through because they thought it was a good company. Well, guess what? It's not a good company. Why do I say that? Well, are they making money? No, the profit margins are on negative 45%. They have never been profitable. They they have had negative profits since, I don't know. Let's go through a year. They have never been profitable. You see, these profit margins always negative, and these huge numbers, and that's why you're losing money. You're losing money because you're buying garbage. When you go into the grocery shop, you can go in and you watch for maybe meat or some milk or something, and you go like, ah, that's $1 too much. Ah, this milk is cheaper than this milk, and you start arguing whether something is $1 more expensive or something. But then you go home, you drink your cheap milk, and then you just throw money on garbage company, and you throw dollars and dollars, hundreds or maybe thousands of dollars into stocks, and then you lose a lot of money, you get confused, and you just becomes angry, and you don't learn, which is the definition of insanity. I am not perfect. I might be insane sometimes too, but I try to live my life to learn from my mistakes and makes make a better future for myself and improve. So that's my tip for this video, and we're gonna go through some other stocks. And for example, you might say that I'm a Tesla fanboy, so be it. But if we look at this company instead, holy, this is in the consumer durables and auto and equipment industry, which is very hard to make money, and it's very hard to have high profit margins because it's so hardware based. And the revenue growth have always been on the plus side, around 50, which is the guidance on all the quarterly reports they release. And the profit margins have always been profitable. They have had maybe, let's say, like 11 to 12, 14, whatever profit margins. And if you compare that to the competitors, well, guess what? They don't have that type of profit margin. So Tesla is making a lot of money on their cars, and they are relatively cheap. So that's why I have a lot of Tesla shares. So that's one lesson you need to learn. Have to stop. You have to stop to look at all these prices at milk at the grocery shop. When I go to the grocery shop with my girlfriend, I don't care what things buy what the different things are costs, or I'm like, ah, that milk is so expensive. Ah, blah, blah, blah. It's just nonsense. It's just stupid. And then you go home and you buy a bunch of crap. Focus instead of making more money and not saving money. That's, I know a lot of people says, ah, you should save money, and you should try to watch all your outcome or whatever. And I'm the opposite. Try to make more of an income. Do some great investing. I've been pretty successful in the stock market for the last couple of years, and I made a lot of money. And that's because I don't buy crap. I used to do that. I bought a lot of shit in 2020, and I made a lot of money, but I also lost a lot of money. I think net for maybe 4 months, I lost more than I earned, which is so stupid because it was just such a booming market. Hopefully, or I would say eventually, at the end of 2020, I still beat the index, thank God. But it could have been very bad if I didn't learn very quickly and adapted, because it was a very difficult environment. I wanted to make this video pretty short, but I will make some further explanation to this and what you should look at and what you shouldn't look at. All I'm saying is make sure that you know what you're buying. Some of you buy stuff that you don't even know what the company is selling. For example, Neo. Let's take Neo for example again. Maybe you bought some Neo shares, but do you even know what type of engine it is? Do you even know that it's electrical? Do you know, have you even sit have you even drove a Neo? Do you like the product? Do they sell anything else, or is it just cars they are selling? Is it how many horsepower? Does it feel good? Is it have it good driving compatibility and all that? Like, some of you don't even know like what the stuff the you're just going off the hype, and then you don't watch the fundamentals. Like, maybe they don't even make money off the products. Is the product really that good if they don't even make money? It seems kind of odd when some people say that their product is so good and this company is so good, and then I go in and I see like the gross margins, maybe the profit margins is it could be misleading sometimes. So maybe what you want to do, maybe you have to look at the income statement and then the gross margin, and then this is the income and minus the cost of goods sold. So this is pure the products. So Tesla, for example, it has 18% gross margin, which means at their what they're selling and the cost of goods sold, this is the ratio between that. And I go in and I see maybe some product have a negative of 30% gross margins, and I'm really like, is that really a good product? No, it's not. They are not making money on that product. Therefore, it's not a good product. You have to go back to the basics of a company. The whole idea of a company is to make money. There is no single company out there that isn't trying to make companies. So therefore, it all boils down to, is the company making money? That's the bottom line. So if the company is not making money, well, guess what? I'm not buying it. So that's it for this video. I will continue further with this, but yeah, that's it for now. See you. Bye.